Good morning, everyone, and I'm going to present Sierra Metals today. We're a polymetallic producer. This is a disclaimer, standard for all presentations, and this is our three operating mines. We have one, our largest mine in Peru. It's a polymetallic operation, and you have the metals we produce, and they are proportional to the graphs. And we have two more mines in Mexico, the Bolivar and the Cusi Mines. One is a copper mine with silver and gold values, and the other one essentially a pure silver mine. So we operate in two countries that are very friendly to mining, so that's a plus for us. Plus, in the areas that we operate in are quite prominent in terms of geological potential. We have a steady production profile, solid financial position. We're growing from brownfield so far, and our strategy is to grow all of our operations from brownfield. And we optimize the resource and reserve base, and then we grow the production. At the bottom, we have the 9 months results for cash position and our debt position. This is our capital structure. We have a major shareholder, which is the area's resource capital. We have other major shareholders as well. This is our coverage at the bottom left, and our stock performance in the last 52 weeks. As I said, our exploration potential is quite significant in all three districts. In the case of Peru, we have 20,000 hectares in the country, and in the case of Mexico, we have 90,000 hectares in Mexico in very prolific areas in terms of copper potential, gold potential, and silver potential. And this is the drilling we've done to date in 2018 and 2019. And the projected. This is our growth profile, which means basically we've been growing at a steady rate, and from 2015 onwards, and right now we're in 2019, and we have essentially completed our targets, which is expand the Cusi mine to 1,200 tons per day, the silver mine. Expand the Bolivar mine to 4,250. We're right around that number today. And our Yauricocha mine will be expanded next year to 3,600. So our growth profile is quite aggressive, yet we're achieving every milestone. This is the basis for our expansions. So this is the potential. We did a PEA for all three mines, and the combined NPV per share was $3.86 about a year and a half ago, and we based our expansions on this study. This is some of the characteristics of our mines on the left, and then on the right-hand side, the revenue mix. 3 months ending September on the upper right-hand side, and then the revenue mix of 12 months trailing. So our largest revenue comes today from copper. 38% comes from copper, and 27% from zinc. This is our production 9 months into the year. So we're well within guidance, given that this year we have 2 ramp-ups at the 2 Mexican mines. Our Q3 and Q4 are end-loaded, and therefore the production, we're expecting to meet the guidance for all 3 metals this year. This is our financial figures 9 months into the year. Solid financial position. This year we'll end up spending about $55 million in capital. It's one of the most important years in capital spend. Yet we finance all of our capital from cash flow generation. This year we reprofiled our debt with a credit line from Banco de Crédito del Perú, and this is the results. We have a net debt of about $58 million. And this is the opportunity for any investor in our company. It's a diversified metal producing company that generates cash flow posed by strong growth, strong brownfield exploration potential in all three mines, and we are operating in two well-established jurisdictions such as Mexico and Peru, who have all the elements to favor mining investment and mining operations. Thank you.